Welcome. I'm Catherine Magana here with Steve Wolf, Rachel Ivanovich, and Greg Carroll. And retirement might seem far away, or it might seem like it's right around the corner. And over the years, we've met with a lot of different clients and helped a lot of different clients with retirement planning. And there's some mistakes that happen along the way that we wanted to share with you. And one of them is trying to go at it alone and not having a financial planner or advisor or doing any tax planning. So obviously that could be a mistake. When you look at doing a financial plan or working with professionals, obviously we're here to look at your goals and then also figure out what kind of income do you need and how should your money be invested. And obviously you factor in the taxation of this. And so the goal is to make sure that you can reach retirement and have enough money to last. But obviously we think that having a financial professional to help you along the way and guide you makes sense versus trying to do it yourself. And we've seen many mistakes over the years.
I know that's, fairly self-serving because that's what we do. But, and there's a lot of people who can do this on their own, who have the right temperament and can handle market fluctuations. But it seems to me that a lot of the times people don't hire a tax planner and a financial advisor because they think about how much it costs. And there are so many ways that a financial advisor can help you actually save money. So what's the real cost? Didn't we had something recently where a client, I forgot the exact scenario, but a client did something that if they had waited, we would have saved them a lot of money.
It was actually somebody that had an inheritance, and they ended up, if they came to us and consulted beforehand, they could have phased out some of the assets over time and not paying taxes all at once. And so the hard part is if you come to us after, it's hard for us to unwind some of this, but the reality is planning ahead and factoring that in because part of retirement planning, there are also instances where you have inheritances. We actually had a client that we were working with. She just retired, and then literally about a month later, her mom passed away and she inherited a bunch of money. And that kind of changed the dynamic of their cash flow and where we were going to pull money. And part of this is we look at, if you need the income, where is the money coming from? Where's the best place to take it? And if you get a windfall of money and income, maybe we're not taking it from retirement assets, which are taxable versus some of the other assets. So, and that also factored into Social Security planning because originally they were going to draw on Social Security, and now they didn't need to. They can let the money continue to let the money grow. So there's a lot of planning and techniques that happen. I mean, we have a plan in place, and usually it's, this is what we're guiding towards. But then life happens, and you have to kind of also, deviate a little bit based on that.
And with all of those scenarios, it's really hard to unwind the tax consequences after the fact. Yeah. It's much better to come and talk with an advisor before you make any moves.
Yeah, it's like, watching Humpty Dumpty fall into a million pieces. It'd be better if we could, say, hey, don't get on the wall.
Yeah. Don't fall.
In the first place. But, some of it, too, is, it's a lot of it is trust issues, too. There are a lot of people who don't trust people in the financial industry. And, there's some good reason for it. I mean, there are people in the industry who are not reputable. So the idea is really for whoever is out there to find someone who is reputable. Go to your friends and say, hey, has this person done a good job for you? How long have you been with them? What's their strategy? There's all sorts of stuff. And again, there are people who can do this on their own. I'm not saying you can't, but the other thing is how much time do you want to spend doing it? Okay? I mean, what we do is this all day long, all week long, looking at different scenarios, whether it's for investing or tax purposes. I'm sure you've probably either saved or helped people save money by helping them with taxes. I don't know if you have any stories about that.
I have plenty of stories, and to come to I'm thinking about someone who's phasing into retirement, who's thinking about downsizing their home, and we've had multiple conversations about, okay, so if I sell my home, what do I do with the proceeds? What are the tax consequences? And for instance, if they owned a business and maybe they owned a building and want to move out of state, they say, we're phasing into retirement, we're moving out of state, what do we do? And they wanted to sell everything all at once. So they were going to be selling the building that their business was housed in, basically, that they owned personally. They were going to sell their personal residence, which had $1 million worth of gains, and then they were going to sell the business as well. And that would have been an absolute catastrophe had they sold everything all at once. And so by making a plan, and we were able to look at each of the pieces individually and also come up with a strategy to minimize some tax loss harvesting. But we did sell everything one piece at a time. And then I also gave them advice, maybe you don't want to sell the family home right away. Maybe you want to rent that out, and there are some tax provisions that you can rent it out and see if you actually like the state that you're moving to before you sell. That will give you the option to actually move back.
So there can be a big knowledge gap
Yes.
between what you think you know and what you really do know versus the people who are doing this all the time who more than likely will know what they're talking about.
And they had spent a lot of time doing research on the internet. So like you said, do you really want to spend the time doing that? And do you believe everything that you read on the internet? And so some of the things that they were, finding, it was really good for them to come and sit down with me and my team and just say, okay, is this true?
Well, all I know is that whenever I've gone to the doctor and I've had an issue, okay, the first thing they say is, don't go on the internet.
Don't self-diagnose.
Exactly.
Don't do your tax planning by yourself.
Tax planning, or I think financial planning.
Yes, absolutely. Because they go hand in hand.
And I think it takes a team, too. I mean, the four of us talk to each other about certain situations because we just are not 100% certain that what we're doing might not be the best way. Or, maybe you've had an experience like with the house or business selling it. We can tap into that knowledge. But there's a lot of finer nuances to retirement planning, your RMDs and charitable giving and trusts and wills and, to take all that on yourself and have that responsibility. And maybe it's one of the spouses likes to do that. What happens if they get hit by a bus? What's the other spouse going to do if they don't have someone that they can rely on for taxes or financial planning?
Of course, that other spouse was the bus driver, so
there is that. Maybe there was some insurance.
It was that blind spot, but it's seriously it's about blind spots. I think in financial planning that tax advisors and financial advisors can work together with you to really help you identify where are the blind spots for you.
So there's a few things as financial advisors and planners that we look at when we do the retirement planning. Obviously, we look at the asset allocation, what's your mix of investments, and then also when you're in retirement, there's different phases of retirement. You might be spending a little more and traveling more in the beginning. Then you might be visiting family and maybe staying a little more local. And then that last phase might be a little more care or health, things that you're looking at. And so along the way, your investment allocation might shift a little bit, but also we look at what's happening in the markets, what are we trying to accomplish with the money, and also what's the withdrawal order of your spending. So what's the best place to take the income? And like Greg mentioned, RMDs, we need to make sure we have money for that. And so how is your money positioned to make sure that we can generate the income that we need? And then the markets change over time. So as the stock market or bond market shifts, occasionally we might need to rebalance your allocation to get you back to our target allocations. And then along the way, as these markets are moving up and down, there's the behavioral side of investing. And we've had multiple calls where clients, especially when the markets are up, everyone's happy, everyone's making money. But when markets go down, the phones are ringing and people, get a little nervous. And that's what we're here to make sure. What's the plan? What's the strategy? And why are we invested a certain way? And obviously, we have the income set aside for you to live on.
But, I can't tell you how many times when the market goes down by a lot, that clients call and say, I need to get out, I need to get out. And I would say just the opposite. If you're really going to be a good investor, you have to know when there's a bargain. Right. You don't want to necessarily always buy at the top of the market. Although if you're a very long-term oriented person, you'll probably do okay. But is that really what you want to do? So, and behavior is huge. And it's very, very difficult to manage your own emotions. Some people can do it, most can't. A Warren Buffett was great at it, okay? But how many Warren Buffetts are there out there? Not a lot.
Have you ever made an emotional decision in your career about your portfolio in the last 30-some years? Yes, we all have, I think. So we learn from that, but it's that experience that we have that we can help, with our clients to take some of that emotion out, which is hugely important. And the cost, in insurmountable compared to what they're paying for any sort of advice. So it could be devastating to them.
Well, and that's the same thing with not making a tax mistake. I mean, in the instance that you talked about earlier, Catherine, I don't know what the dollar amount that they would have saved had they done it, but wasn't it something in the tens of thousands of
I was
dollars?
going to say about $20,000.
Let's see, that would take
That's
about
significant.
25 years of fees, to make that even out. So there's so many things that can happen with a portfolio. And I just talked to somebody recently, said, well, if I can beat the manager in performance, then why do I need an advisor? And I tried to tell them it's not just about the performance. There's so many other nuances of a tax plan, a financial plan that can go wrong. It's not just about performance. And I think, unfortunately, that's how a lot of people look at people who are in our business who are financial advisors. So why are we paying them 1% or whatever the percentage is?
And everybody's situation is so unique. It's hard to take something that you read or hear from a friend or colleague and just apply that to your own situation. I've had that happen so many times with clients that come in and say, well, I've heard this. And then when we apply it to their own situation, the result is very different.
Sure. Well, it depends on how complex your portfolio or your tax situation might be.
Exactly.
Two people can have the exact same stocks and bonds and have a completely different financial situation when you look at taxes and where they are in life. How old are they?
Are they married? Do they have children? Do they own rental properties? I mean, you keep adding different things and different layers, and the complexity, it just goes on and on.
It's not a set it and forget it type of a thing. Again, there are certain people who can do this, and I'm not saying that only advisors can help you, but I will say that for the vast majority of cases, I think having advisors for your financial plan, for your taxes, will help your life.
And honestly, if you don't have a plan in place yet, don't feel bad. I read this article from the Stanford Center on longevity, and the Society of Actuaries states only 1/3 of pre-retirees say that they have a retirement plan, which I thought it was just...
I guess there's some work ahead of us.
There's some work, definitely some work for us to do.
Well, you know what they say, if you don't have a plan, then any road will get you there. So, I don't think that's where we want to be.
We definitely don't
Where's
want
it going to get you, though?
Exactly. So, but at any rate, I think people definitely will be advantaged by having a professional, trustworthy planner, advisor, etc.
Please stay tuned for important regulatory disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. Wolf Weezy Magana, LLC, doing business as WWM Financial, Savvy Doc Financial Planners, and Savvy Woman Wealth Management, is a registered investment advisor with the SEC.